As we enter 2017, stock and bond markets await the most dramatic change of economic agendas in more than a generation. And while much is yet to be determined regarding the implementation and impact of the expected policies of the incoming Trump administration, markets are clearly anticipating some of the following changes. Lower tax rates for individuals and corporations, less overall government regulation, higher levels of fiscal spending, specifically in the area of national infrastructure rebuilding, less government gridlock between the White House and Congress, and potentially higher federal deficits as these policies are initially funded. In assessing these pending changes, we feel it is important to recognize 2 points. First, we believe the new administration is inheriting an economy already on the upswing, as evidenced by recently improving gross domestic product in the third quarter, strong consumer spending, and increasing wage growth. And second, since the election, interest rates have risen considerably. The 10-year Treasury yield is now more than a full 1% higher than where it stood last summer. We view this recent rise in rates as favorable for the economy. With all of this in mind, we have defined 6 themes for 2017 that we believe investors should focus on. Number 1, on balance, we believe the economy and investors will stand to benefit from the new administration's expected economic policies, assuming they are implemented prudently and in a timely fashion. Number 2, we feel that U.S. stocks enter the new year positioned for a strong rebound in corporate earnings. Combined with a more favorable business environment, this could potentially result in double-digit gains for equities in the year ahead. Number 3, we see a new world for interest rates, one that is likely to result in both higher short and long-term rates and a steeper yield curve. Number 4, in navigating this new interest rate environment, we believe yield-based investors should diversify across a number of income-oriented strategies that would include short-term bonds, high-yield bonds, floating rate notes, preferred stocks, and high-dividend common stocks. Number 5, after a long hiatus, we believe inflation could be back on the horizon, and we suggest investors should carve out a portion of their portfolios to account for this. And on the international front, we see opportunities in fundamental, value-based approaches to develop market stocks, and we believe long-term opportunities now exist within emerging market equities. For more details on these themes and other pertinent topics regarding the year ahead, please download a copy of the Transamerica 2017 Market Outlook.